The year-on-year inflation rate for the month of September 2023 came in at 18.4%. The latest stats from Zimstat show the year-on-year inflation rate is given by the percentage change in the index of the relevant month of the current year compared with the index of the same month in the previous year. The month-on-month inflation rate in September 2023 was 1.0%, gaining 2.3 percentage points on the August 2023 rate of minus 1.3%. The food poverty line for one person in September 2023 was $73,236, up from $70,460 in August 2023. The total consumption poverty line for one person was $95,463 in September 2023 from $91,063.30 in August 2023. Now, Eben Mabunda joins us live to help make sense of the figures. Good evening, Eben. What do these figures mean?
Well, of course, we are seeing that marginal increase in terms of the month-on-month inflation. No wonder we are seeing that increase in terms of the food consumption line there indicated, as well as also the total consumption aggregate, as you have indicated in that particular discourse. Now, what would be important at this point would be the movement in terms of the annual inflation that has come off by over 50% in the month of September, perhaps indicative of some of the reforms that were introduced at a monetary as well as at a fiscal front. But we're also seeing an increase in terms of US dollar transactions throughout the economy. Speaking of the loans that were extended in the first half of the year, that came in at over 90% in US dollar terms, as well as commercial transactions that are now being rendered, most of them in US dollars, with an aggregate of over 80%. And so, given the fact that these are blended inflation statistics, this then helps to explain some of the trend that we are seeing where the annual inflation matrix is actually concerned.
Now, what's the reconciliation between the inflation figures and the money supply in the economy?
Well, quite a critical aggregate. There is a strong correlation, of course, between the inflation movement as well as the monetary aggregates in the economy in respect of the reserve money as well as the broad money in Zimbabwe's economy. Now, I must indicate that owing to some of the reforms that were introduced at both a fiscal as well as at a monetary front, particularly where it is that the central bank had to curtail some of the monetary injections that were coming in through the 25% surrender requirement injections there, that sort of had that kind of an effect of perhaps reducing the extent of the broad monetary, the broad money within the Zimbabwean economy. And also perhaps there would be some argument that says that there was a reduction in terms of the payments to the contractors that was made by the government. But of course, Treasury has indicated that it's a 50-50 payment, both in Zim dollar as well as in United States dollars. But I still would hasten to say that that 50% aspect would also have that particular effect where the inflationary aggregates are actually concerned, of course, indirectly through the movements in terms of the broad money within the Zimbabwean economy. And so that would be important, especially going forward, to ensure that at a fiscal front, the government expenditure is kept in check, as well as also at a monetary front, that we don't see increased movement in terms of the reserve money aggregates.
Thanks, Eben, for breaking that down. Now, economists say the economic environment in Zimbabwe has remained largely stable, but there is need for authorities to put in place more measures to increase confidence in public office holders. Our business correspondent, Melissa Chatikobo, gives us more in the following report.
It's been nearly 5 weeks since Zimbabwe held its harmonized elections. President Emmerson Mnangagwa won a second term and formed a new government. Despite making changes to several key ministries, President Mnangagwa retained Professor Mthuli Ncube as the finance minister. Analysts say the return of Professor Ncube to Treasury gives a clear signal to the market that the government will maintain its policy thrust.
I knew that the Zimbabwe dollar was here to stay. Of course, I knew that Mthuli was going to be reappointed if ZANU-PF got re-elected. So I think it means continuity. Of course, he has already said that they are going to continue with the tightening of both the fiscal policies and the monetary policies.
For the greater part of the year, Treasury has been mopping up excess liquidity in the market to try cut down money supply, which had been stoking inflationary pressures. Resultantly, the Zimbabwe dollar has been stable for a sustained period. For the past 5 weeks, the Zim dollar has shaded 4.9 percentage points against the greenback.
But going forward, I think inflation will depend on the performance of the local currency, which is Zim dollar, because we are talking about the blended inflation, which is actually largely stable because the US dollars constitute more in that basket weighting. So in as much as the economy is rapidly dollarizing, expect the blended rate to remain actually stable.
The stability has been felt in the ordinary citizens' pockets. They hope the status quo continues.
Yeah, so manje rate is stable. Kuti tingoshwira kuti rirambe riri papapo risakwire because akakwira anenge ari mahwani anenge ari mahwani but zvame manje riri stable zvarikumbokwira.
But Zimbabwe is not exempt from external inflationary pressures. Movement in global oil price may have a knock-on effect on local commodity prices.
I think there's going to be a lot of pressure again on inflation, even the blended inflation, given that we are projecting the price of fuel to be on an upward trajectory. We've seen cutbacks in production by Russia and by Saudi Arabia. So that's going obviously to push fuel prices.
The government is projecting that the economy will grow by 5.3% this year on the back of improved farm yields and strong mineral prices.
There's been a massive improvement in terms of cereal production, and also the firming up of commodity prices. Well, that's a boon for the economy.
Authorities say the Zimbabwean dollar is here to stay and will continue strengthening its purchasing power. Local industry agrees, but it wants authorities to put in lasting measures that strengthen the local currency. I am Melissa Chetkubo reporting for ZTN Prime in Harare.
Now joining us live, we have Business Weekly Deputy Editor Kudzanai Sharara to discuss the latest inflation figures and the general economic situation. Now, Kudzi, we witnessed the stability of the Zimbabwe dollar in recent weeks. This week, the Zim dollar weakened by 4.9% to hit its lowest point in 12 weeks. What impact could this have on inflation, on the inflation aggregate?
Thank you. So what we have seen is that the Zimbabwean dollar has been weakening by marginal percentages, less than $50 per every auction. But in the last 2 weeks, the first time I think it weakened by about $300, and then this week it weakened by another $250, which is roughly about 5%. And I think it will have an impact in terms of pricing of goods and services. We are likely to see goods and services having their prices increased, and that will feed into the inflation numbers for the month of October. So yeah, we are likely to see an upward trajectory in terms of inflation, which we have already started to see even in the month of September, where we saw inflation also going up.
Now, having received the September inflation stats today, what needs to be done to guarantee the stability of the Zimbabwe dollar and actually keep inflation reined in?
Look, in terms of the Zimbabwean dollar, I think we have seen that its usage has significantly declined. I think more than 90% of the economy is trading in US dollars. But given what we have seen with the latest inflation figures, even in US dollar terms, prices are going up. The September inflation figure is above 18. I think it's 18.4%, which is higher than the 17.7% that was recorded in the month of August. So you can see that prices are going up even in US dollar terms because the inflation methodology that they are now using is skewed towards US dollar prices. So we need, obviously, to remove the distortions that are there between the Zimbabwean dollar and the US dollar, so that business operators, for those who are providing services, they will be able to price their products correctly without the distortions that are prevailing in the market at the moment. We are seeing those who are in the formal sector, their pricing is distorted, which has meant that they are not competitive when compared to informal traders. So we need to put measures that encourage the use of the Zimbabwean dollar. That's number one. Also, we need to have a currency trading system that is accepted by the market, so that we end up with one single exchange rate